The stock market is crashing, things aren't looking too great, and many people are wondering, is this just like a little short-term blip? Is it gonna, bounce back really quickly, or is this gonna be a long-term trend? So in today's video, we're gonna talk about the 4 major things going on with the market. We're gonna put timestamps down below as usual, so you can skip ahead to any portion in the video. We're also gonna talk about what I'm doing with my plan moving forward. So if you enjoy this sort of content, please be sure to like the video, subscribe, and if you don't already have the public.com investing app, make sure to go ahead and follow me on that. You can buy stocks, sell stocks, and see exactly what I'm buying and selling in real time, as well as a full portfolio breakdown. Think of it like an investing app combined with social media. It is completely free to follow me. Use the code Michael when you sign up, and you'll get up to $50 in a free stock. But anyways, let's start off by talking about what is triggering this all of a sudden drop in the market. And first of all, what's triggering the drop in the market right now is essentially what is going on in Japan to start off. This is one of the major announcements that recently came out because spectators are going to be facing a ban from the Olympics entirely, from the Tokyo Olympics, because of a rise in number of cases in Tokyo, Japan. Japan declared a state of emergency on July 8th, Thursday, July 8th, 2021, and they said that this will run through the hosting of the Olympic Games, and they're going to try and prevent the spread of cases, prevent the spread of the disease by simply banning all spectators from coming. Previously, they had said that they had thought there would be able to be spectators, at least some of them, at the Olympic Games. So this has come as a shock to many people. And while Tokyo has not seen the big impact like countries like the US or Europe has seen with the pandemic over the last year and a half, since they've only had about 810,000 cases, this is still a big uptick in terms of their numbers. We are seeing that the country has had a slow rollout of the vaccine. Only about a quarter of the population has had at least one shot, while the US has significantly more people that have been vaccinated. So this is one of the main reasons why we are seeing this bit of a trigger in the market, because of the uptick in cases, not only in Japan, but in other areas of the world as well. Second thing that's going on with the market is the Labor Department. Labor Department came out with surprising data this morning, and that was with regards to the latest jobless claims report. Unexpectedly, it rose to 373,000 people who filed for unemployment. And this is interesting and surprising, because what was going on is that the Labor Department and people and analysts were originally projecting that there would have been about 350,000 initial unemployment claims, but we have seen it increase. Typically, whenever we have seen these numbers increase over the last year and a half, ever since the pandemic started, that caused a lot of fear in the market. People get scared of what is going to happen moving forward. They don't like seeing when we see increase in the number of unemployment claims, especially since we are still at very high and elevated levels since we had before the pandemic. Before the pandemic, we were still significantly lower than we were now, so people get very worried, very on edge that maybe we're seeing a slower economic recovery and things are slowing down with economic growth. So that's why we're also seeing a little bit of a freak out with the market, a little bit of a big reaction, well, not a little bit, but a big reaction in the market right now. Third thing going on is what's going on with interest rates. So right now we are continuing to see that interest rates are dropping. They are continuing to drop, and this is becoming something that is good for growth stocks, but other stocks that were expected to benefit from the recovery, let's say like cruise ships and airlines, those stocks are leading this bit of a crash, and they're taking the biggest hit. With interest rates, when we see interest rates go up, a lot of the time people cycle into bank stocks that will perform a lot better when interest rates go up. But now we're seeing that it looks like the trend for growth stocks is still here to stay. Interest rates right now have dropped to 1.273% on the 10-year US 10-year Treasury. This is the lowest it's been over the last year and a half, ever since ever since March of 2021, excuse me, not the last year and a half. Ever since March of 2021, we had seen interest rates rising. Now they're starting to drop again, and this is getting a lot of people to cycle out of some of these inflation plays, get back into some of the big tech names, get back into some of the bigger tech stocks. But either way, some people are concerned as why this is happening, and does this mean the market is like broken? according to a couple of analysts, they had said that this could just be a sign that things are not working the way they should in the financial world, because we shouldn't really be seeing interest rates drop right now with everything going on in the economy, with how much money is being printed, with the current pace of the economic recovery. They say this shouldn't really be happening, and it is a little concerning. So that's the other thing. And then finally, the last thing I do want to go over is what's going on in China. Chinese stocks have been taking the biggest hit over the last couple of days, especially after what happened with Didi. Didi is a ride-sharing company similar to Uber, but they're much bigger than Uber simply because China has a lot bigger population. And what's going on now is that we're seeing that all Chinese stocks are suffering because of this. What happened is Didi is a ride-sharing app like Uber, and China essentially just took the app off the App Store, made it so no new people could download the app, and they're investigating the company and the data practices. Now, a lot of people are concerned about what's going to happen with other Chinese stocks like NIO, XPeng, Li Auto, Alibaba, JD.com, and all these other stocks that are listed on US stock exchanges. Right now, there are at least 248 companies, Chinese companies, that are listed on major US exchanges, and they have a total of $2.1 trillion market cap. So that's a pretty significant portion of the US stock exchange and stock markets. So because of that, a lot of investors are getting fearful of increased regulatory concerns between the US and China, and all of this combined between interest rates, cases rising, between what's going on with the jobless data and what's going on in China is all causing a lot of fear in the market, which is why we're seeing the market crash. So that's what's really going on right now. I just wanted to give you guys a quick update on the current status of the market, what's going on. Me personally, I've been continuing to add on to these dips. If you don't already, follow me on public.com. You can see exactly what I'm buying and selling in real time. It's completely free to follow me, and you can get $50 when you download the app and make a deposit of like $1.